At Solid Financial Solutions, we are passionate about helping people protect, preserve, and prosper what they work hard for. I believe we're walking into a season right now where it's imperative that we're not at the mercy of a bank. Did you know that when you give a Canadian bank $1, they lend it out to approximately 12 other people? And if you give a US bank $1, they lend it out to approximately 26 other people. A European bank, roughly 56 times. Now, I don't care if it's 12 or it's 56 or it's 2. If you and I give a bank $1 and they lend it out 12 different times, when you and I want our dollar back, that's when the bank gets in trouble. Now, if you and I were to collect $1 and lend it out to 12 other people, we would call that fraud. If a bank takes $1 and lends it out to 26 or 12 other people, they call that fractionalized banking. How does that make sense? How do they get away with that? Simon Black from The Sovereign Man recently wrote an article, very powerful article, and he said this: as it turns out, the Bank of Canada is actually the most pitiful capitalized central bank in the Western world. They're in such bad shape, he says, they actually make the Federal Reserve look healthy. The Federal Reserve was created in 1913, and basically they were given the ability to print money out of thin air. The US Federal Reserve shows a capital reserve of approximately 1.27%, and Canada roughly 0.47%, as in less than 0.5%. That means if you deposited $100,000 into your Canadian bank, they would have approximately $470 that's actually there. This isn't safety or stability, he says. It's simply a rounding error. Canada also has zero reserve requirements for its banks. This means that Canadian banks are not obligated to hold any of their customers' deposits. Any at all. So yes, it's legally permissible for a Canadian bank to loan out 100% of its customers' funds. Not to worry though, you and I have heard the argument that the Canadian Deposit Insurance Corporation, also known as CDIC, is standing there to insure bank deposits up to $100,000. But when you look at it closely, there isn't much there for the depositors, for you and I at all. There's roughly $646 billion of eligible deposits in Canadian banking system. Yet, the CDIC only has $2 billion of that in cash available to insure it all. That's only a ratio of 0.43%. Even more troubling than that is that Canada has legislated a Cyprus-style confiscation of deposits in the event that the Canadian banks deplete their capital. What does that mean? Well, you've probably seen it in the paper or watched it on television. Just recently, the Cyprus banks closed their doors to its people, and the depositor money was locked up for a time. And the banks ended up bailing in to take money from the depositors as opposed to bailing out, taking money from the government for help. Buried deep into the government's Economic Action Plan 2013 in Canada, there's a provision that would implement a bail-in regime for systematically important banks. This would legally allow the banks, if you can believe this, allow the banks to tap into customer deposits, your and my accounts, if the banks ever got in trouble. Can you believe that? Something I don't find particularly safe, he says. Has this happened recently? We just talked about it in Cyprus. Of course it has. Last, the Canadian myth really starts to become apparent when you look at the country's gold reserves. And just as a side note, a country's gold reserves is known as the muscle power of a nation. At the beginning of the century, he says, Canada held 46 tons of gold. Now they only hold 2 tons, 2.29 to be exact. That's a 93.5% decline in gold reserves in just over a decade. In other words, Canada's banking monetary leadership has made a conscious decision to reject real assets, hard assets, in favor of paper assets that can be printed out of thin air. They've even managed to run their central banks into borderline insolvency. It's important to look at the facts and not rely on sentiment. To anyone who rationally looks at the data, the obvious conclusion is that the Canadian banks are certainly not the safe haven that they used to be. That concludes his article. Now, I don't say all this to put fear into you, but rather to press upon you the importance of you and I being completely independent of the banks. Call the number below and we'll show you how to easily become your own bank as opposed to being at the mercy of another.